Welcome back to Barry Charles, your one-stop shop for everything finance. In today's episode, we're going to talk about the parent company of the explosive online retailer, Temu. Yes, Temu is taking over the world by storm, and the parent company is flying to the moon. After early struggles with the company, it has absolutely been flying to the moon. This company, PDD Holdings, a company you should be buying, with Temu and as it's on the brink of absolutely bonanza results. It has taken over Alibaba as the number one stock to buy in the Chinese market, in most people's opinion, and the money does not lie. But let's have a look at this company here, PD Holdings. We're going to do a stock analysis. We're going to look at revenue, P/E ratio, net profit, dividends, the short interest, return on invested capital, long-term debt, and so much more. And if you stay right to the end of the video, I will give you the potential intrinsic value of PDD Holdings. Yes, well, let's get to it right here, right now. The Chinese stock that is now in Dublin, Ireland. Of all places, this is where the company is right now. If you didn't know that, it's something you've just learned right here, right now. They actually are in Dublin, Ireland right now. So you can't say it's a Chinese company. It's a UK company now. Dublin, Ireland, believe it or not. And yes, Temu is US based. If you didn't know that, you assumed it's Chinese. It's actually a US based company. So there you go. If you didn't understand that now, you certainly have learned a lot today already. So give me a thumbs up and subscribe to the channel. Let's get to it. Let's do a stock analysis of PDD Holdings. Yes, best known for Temu, but it also has its own company with the company's name after Pinduoduo, which is an e-commerce business. They get sales from anything from agriculture to clothes to bags to cleaning products to cosmetics to virtually everything, sport and fitness, absolutely everything you need in the online space. PDD Holdings gives you that option. Temu has obviously been one of their ballistic companies and really has made them profitability. Is this profitability going to continue to grow? And should you buy the stock? Well, that's what you're here for. This is what we have come here to try and learn, see if we can find potential for you to buy this company at the right price. So let's have a look at the stock and see where the potential buy market is of PB Holdings. Yes, we're going to look at revenue. Yes, revenue of this company at the moment is 18.9 billion. I mean, that was 2022, and now 2023 went up to 27.1 billion. So that is what we're talking about, a 50% rise. That's what we're talking about. And then profit similar, 4.5 billion to 6.3 billion. So they are absolutely climbing up the ladder. Yes, if you want a company that's going well, this is definitely a stock to look into. No financial advice. Earnings per share, 5.59. And the PE ratio is 25.19. So it's not actually super expensive if you think this company is the future. If we look at 52-week range, we're looking at anywhere from $59. Congratulations if you were at that price, up to $153. Absolutely could have nearly 3 extra money, folks, if you were in it at the lower rates. There's no dividend on the stock, so no need to talk about that. The short interest is at 4.4%, so some people think it can potentially be a company that you can take off the market. The market cap is 187 billion. Just to give you an idea, that's like a 6x here, or whatever, 5x, 4x, whatever you want to call it, on companies like a Royal Caribbean. So that just gives you an idea of where this company is at the moment and where they're heading to. Total assets is also increased from 34 billion to 43 billion. Total liabilities of 17 billion is increased to 20.8. I don't like that, but it is half of the total assets. That's, even though they've increased, it's half. This is beautiful, absolutely beautiful. I do not own the stock at all, so I'm just giving this on my opinion, what I'm seeing right now. this is a stock you could potentially look at buying, folks. Potentially. But then the long-term debt comes in, and there's not much. 222 million. It was billions before, but they dropped it down to millions. Absolutely staggering. This is just looking like a buy all day, folks. Not financial advice. In terms of, say, the free cash flow at the moment is 7.8 billion, up from 6.9 billion in 2022. So they are doing very well there. Shares outstanding. They're doing a little bit of dilution to you, folks. It's gone up to 1.3 billion from 1.1 billion. So that's the only, at the moment, this is the only bad metric I can see in this company. A return on invested capital of 66%. Wowee! This company could be the steal deal of 2024. Or is it already gone too much up the hill? Well, let's have a look at the intrinsic value potentially of this company for me. Well, obviously, just before we get to the intrinsic value, this company obviously has to grow the space and try and get more people involved, maybe do some more acquisitions to build the business to grow. But if they can continue this sort of revenue growth and net profit, well, the sky's the limits on terms of where this price could go. But if they flatline, anything can happen. But anyway, we're going to look at the intrinsic value, which I use the TradeBrains calculator for this, which you can find on the site. If you just put in TradeBrains Graham calculator, you'll find it, which looks at the current share price with the earnings per share. You put in a growth rate, and the current bond yield gives you an intrinsic value. So we're going to look at the current share price around $144, with earnings per share of 5.59. With just say a low growth rate of 5%, you're looking at a $107 stock. So if you think there's no growth into the future, then maybe it's overvalued. But if we do the same metrics at 5.59 earnings per share at a 10% growth rate with the same share price, now we're starting to look at fair value, or just a little bit undervalued at $167, the intrinsic value. If we put that earnings per share up to $8 with the same metrics, 10% growth rate in the current share price, then the stock could nearly double with $237. And if you think it's going to shoot out of the park and double its earnings per share to $11 and go up to a 15% growth rate, you're looking at a $441 stock. Where do I see the stock? Well, in terms of what I've seen, I mean, there's a whole lot of different companies, don't get me wrong, but in terms of what I've seen, this is probably one of those companies in a long time that maybe I seriously will do more research on and go, I need to invest. Not financial advice. Obviously, they got to continue. They've had some bad things in the past. You can read up about them, that they've had some issues with legal issues in the past. So they could come back to bite them later if they don't do the business properly. So that's a question mark you've got to look at with this company. It's obviously a danger mark there. From moving from the Cayman Islands to Dublin, but they're potentially from China, and they're doing some shady deals. That's the question mark you've got to think about. Why is this all going so positively? But in saying all that, it's a potential buy. If I'm looking at what I'm seeing with the current metrics, where I'm seeing maybe where the stock is at, I think on the current metrics, it's undervalued. I see the stock at about $200. I really do. Will it drop to $100 to where I need it to be to even look at it? We'll see. But the potential is there for this to go to 500. It could take a long time to get there. But this, again, is a company that can easily go to zero as well. Even though you might say I say it for every company. But this company, in particular, with the issues it's had in the past, if it's got away from those issues, it's all right. But if it's got dodgy dealings, it'll come back to haunt them eventually. But this is definitely a stock that's potentially in the Chinese market. It's definitely one that I can see big improvements in and potential for a lot of return for you. 144 could be a lot of return, but I like to see a bit lower for me to really look deep diving. I'd be looking to try and get this under 100 in terms of really looking seriously at investing into it. If it ever goes to that, and then I will start looking really. Can I potentially buy it now? Not sure, but if things change and they continue to improve, you never know. But I think, yeah, if you're buying at the current prices, I think you will do well. You might not go world records, but you will do well. But anyway, that is just a little bit of a stock analysis and intrinsic value of PDD Holdings. Hopefully you got a lot out of this video. Remember to like and subscribe to the channel. Share this video with all your friends. And I'm here each and every week with 3 videos just for you as we analyze stocks for you at this channel. Have an awesome day out there.